And then obviously, as we progress further in the cycle, the newer issuers are going to resort to riskier forms of corporate financial derivatives to generate positive equity price performance. And that's what will get people into trouble when the prices start falling. And so I think that there'll be some massive DAT debacles at the bottom of the cycle, right? FTX failed at the bottom of the cycle. BlockFi failed at the bottom of the cycle, not at the top of the cycle, not when we're on the way down. But when we have the most to spare, when Bitcoin's already down 70% from $1 million or whatever it is, right? That's when these companies go belly up and they trade at massive discounts. And there'll be interesting opportunities for arbitrage funds in the public markets around the world, buying these into the discount and then liberating the crypto from the balance sheet.
Mm-hmm.
Hey guys, welcome to Everyday Finance. Though not in a way that bullish investors would want to hear, Arthur Hayes warns that Bitcoin's bull run isn't over. As Bitcoin's performance in November 2025 becomes historically dismal, his warning signals a significant decline ahead. Bitcoin has failed to recoup pace after losing its hold on the $100,000 mark, which has caused a fall in trust among institutions and traders alike. Once driving enormous inflows, spot Bitcoin ETFs are currently at the epicenter of one of the worst outflow cycles in history. Midway through the month, almost $2.3 billion has already departed, and November is expected to eclipse February's $4 billion outflow. The Fear and Greed Index has dropped to 17, indicating that fear is taking over the scene. The withdrawals from major issuers, such as Bitwise, Grayscale, BlackRock, and Fidelity, indicate widespread systemic weakness. Historical seasonality isn't helping either. Every red November has been followed by a red December. Quarterly returns are still falling, reflecting the harsh trends last observed in 2018. Technically, the bearish view is further reinforced by the breach below a significant 15-month support line. There is a chance for a rebound, but only if sentiment quickly shifts. In the absence of it, November might become the worst outflow month in Bitcoin history.
I think the premise of that question is a bit flawed because Bitcoin is the best performing asset when you think about currency debasement ever, right? Okay, yes, the S&P 500 is up in dollar terms, but deflate that by gold since 2009, the S&P has not recovered its gold price from 2008. Deflate the housing market by gold again, and not anywhere close to where it was. Tech stocks are probably one of the only things that have big US tech is probably one of the only things that's done well deflated by gold. If you deflate things by Bitcoin, it's not you can't even see it on the chart. It's just so ridiculous about how well Bitcoin has performed. So, I got asked this question like, why is there a difference between TradFi and crypto? There's not. Actually, when you talk to a TradFi person and sort of really get down to what they believe, what do they believe? They believe the same things that we believe. They believe that when something happens, the Fed, the Treasury, the BOJ, the ECB, the PBOC, the SNB, they will print money. And what happens when they print money? They buy bonds. So in their mind, because they know bonds and they did a CFA or they went to business school, okay, well, if I buy the 10-year at 5% and it goes to 4% and I lever that 30 times, I become Ray Dalio, right? That's their mind. That's all he fucking did. He went long the fucking 30-year bond on leverage. That is interest rate parity. I can't fucking shit on them. Good on you, for running that fucking trade. But that's the trade. We all believe in the same things. It's just that crypto is the faster horse. Bitcoin has been the best performing asset on this currency debasement theme across any asset class. So it's not that we have a difference of opinion. We believe the same things. We believe the money will be printed. It's just that we in crypto choose an asset that performs better. And so if you take a very short time horizon, from a couple months ago, and you say, oh, why isn't Bitcoin at 150,000? Well, I'm sorry that you bought Bitcoin 6 months ago, but for anyone who bought it 2, 3, 5, 10 years ago, they're laughing. I don't give a fuck, right? I have so much outperformed the debasement of the dollar and every other fiat currency. Why am I being all moody that, Bitcoin is not, hitting a new all-time high every day? It doesn't matter that the S&P is at 6,700 or whatever it is. It's still down in gold terms from the crisis. So I think people need to readjust their perspective on this. If you thought that you were going to buy Bitcoin and the next day you were buying a Lamborghini, you're probably getting liquidated because it's just not the right way to think about things. Maybe Lido, e-staking, that kind of stuff. Um, Again, I'm not a jack of all trades. I have a very concentrated portfolio. I understand my names very, very well. I can't say that these are going to be 1,000x names. Like if you buy some like, $5 million shitter meme coin and it goes to whatever, like, yeah, cool. You're going to make more money than me, but like, I'm not taking that kind of risk. I need to put a lot of capital into something and not be looking at my phone 24/7. So I think depends on the type of investor you are. You might say, oh, well, I'm not going to make 1,000x return on any of these names. Yeah, I 100% agree with you. But, these are also names that actually have product market fit, thousands of users, billions of dollars of annualized revenue. So they're not going away tomorrow. Like, whatever, the hottest thing is in the new L infinity space, that's going to have no clients and, maybe it goes up, but I just that's not in my sort of milieu. Absolutely. I don't know what the number, what the the developer count is now, but when I spoke to Jeff, it was like 10 people. Maybe it's marginally higher now. As a person who's run a large exchange, the ability for this team to ship code is absolutely insane. I think the team in Athena is about 20 people. So you have some of these amazing teams who are able to ship product better than any centralized company can ever do, because they do one thing, they do it well. Hyperliquid is a leverage trading platform. They're moving into spot. With the HIP-3 sort of permissionless listing mechanism, now you can permissionlessly list perpetuals, which is something that a lot of other protocols have staked their name to. DYDX is one they did very, very well, but unfortunately they decided not to pay anyone out of the lots of money that they made, and that's why their token's a piece of shit. So I think that Hyperliquid next goal is to beat Binance. How does Hyperliquid get from here to the number one exchange of any type globally? Is it a fait accompli? Of course not. It's going to take a lot of work and luck and all that sort of stuff. But that's what I'm betting on, and I think it's moving in the right direction. The amount of energy that we've seen on these proposals for the USDH from every major stablecoin issuer tells you how integral Hyperliquid is to the trading ecosystem within crypto within basically 18 months, if you want to think about it.
Yeah.
So the forward on this is amazing. And as more people learn about this, it's only going to get better. The one thing that gives me a bit of pause is the massive unlock of the team tokens in November. So we're going to have to see how that sort of plays out in terms of positioning. But as I said in the presentation, my 2028 target is in the 100x plus sort of return if we get this sort of massive move into stable coins. So that's sort of why I think. Yeah,
on hype.
If we're saying there's going to be 10 trillion in stablecoins, this could be the largest exchange of any type globally. And there's, what is this debasement? What's the problem with debasement? Is that it makes everyone who doesn't own a lot of financial assets a speculator. Because what is it? Oh, I don't have enough money to buy a house. I don't have enough money to buy one Bitcoin. I don't have enough money to do these things that I want to do. But there's this leveraged trading venue where if I pick the right, piece of shit coin, or I pick the right meme stock in the American, casino stock market, I can get the car. I can pay off my student loan for the worthless degree that I got. And so it's insanely bad for a society that this is what we're being reduced to. But this is the system that those in charge have chosen to create, and the population is going along with it. So fuck it. I'm going to own the casino where the plebs are going to gamble.
Some of the largest organizations in the world are covertly increasing their investments even as retail sentiment plummets and ETFs lose value. By increasing its exposure to Bitcoin through BlackRock's iShares Bitcoin Trust to an astounding $443 million. Harvard University shocked the market. Its holdings increased by 257% from 1.9 million shares in June to 6.8 million in Q3, making IBIT Harvard's largest publicly declared U.S. position, even larger than its holdings in Microsoft, Amazon, and the SPDR Gold Trust. The decision indicates growing long-term conviction from top institutional money. Even though Bitcoin still only makes up a small portion of Harvard's $56.9 billion endowment, others are doing the same. Al Arda Investments of Abu Dhabi increased its IBIT holding to $518 million. While Emory University almost doubled its exposure to Grayscale, The ETF approvals in early 2024 have eliminated the governance and custody, obstacles that previously prevented pensions, universities, and sovereign funds from accessing Bitcoin within completely compliant, regulated frameworks. These filings show a potent countertrend despite outflows and volatility. Wealthy institutions are building up as the general market panics.
So I am disclosure. I'm an advisor for UPEXI, UPXI-US, a Solana DAT. So obviously, I intrinsically believe that this is a meta that will continue in the sort of the TradFi corporate finance circles. However, I would say that there's only going to be one or two winners in each category of coin, right? In Bitcoin, you've got MicroStrategy. It's kind of hard to come into a Bitcoin DAT and beat MicroStrategy. I know that there's been the Block 1 and a few others and the Nakamoto. But yeah, it's going to be very hard to upset Michael Saylor. And then you have sort of the Bitmain and the others in the East space, obviously UPEXI and some others in the Solana space, and pick your fucking shitcoin, and there's going to be a DAT on that. So the question for you as an investor is, okay, basically what they're doing is corporate finance alchemy. If I can get my stock price high enough, the market cap high enough, if I can get my trading volume high enough, then there opens up all these institutional investors who are allowed to buy the debt and equity derivatives that I can sell. And the higher value of my stock, the more crazy shit that I can offer, which basically allows me to, positively accrete Bitcoin or some other shitcoin on my balance sheet and thus benefit equity investors. So it's a game of size and scale and distribution. And this is what Michael Saylor has showed us, is that you have a universe of underperforming money managers or indices that want the Bitcoin risk, that amazing volatility adjusted performance, but are not allowed to buy Bitcoin ETFs because they're considered usually currencies or commodities, and that's not within their mandate. They're not allowed to buy Bitcoin and custody it themselves because that's just not what they do as a money manager. So they can only buy public equity companies. And so if you're able to pitch them a public equity company, but has this crypto underlying, then they'll buy whatever you're selling and they'll pay $2 for $1 or $3 for $1 or $10 for $1, whatever. They don't give a fuck, right? They're just following rules. And so that's the game, but it's a game of scale. And there's only going to be one or two per each category. And then obviously, as we progress further in the cycle, the newer issuers are going to resort to riskier forms of corporate financial derivatives to generate positive equity price performance. And that's what will get people into trouble when the prices start falling. And so I think that there'll be some massive DAT debacles at the bottom of the cycle, right? FTX failed at the bottom of the cycle. BlockFi failed at the bottom of the cycle, not at the top of the cycle, not when we're on the way down. But when we have the most despair, when Bitcoin's already down 70% from $1 million or whatever it is, right? That's when these companies go belly up and they trade at massive discounts. And there'll be interesting opportunities for arbitrage funds in the public markets around the world, buying these into the discount and then liberating the crypto from the balance sheet. I really care about what is the expectation and trajectory of money printing. And so I don't, my belief is that Trump hasn't even gotten started. He's going to have all the Legos in place to really juice the US economy starting in, middle of 2026. And so the question is, what is the market forward on that money printing? I don't know what that looks like. If I believe that the market's expecting something so insane in terms of the amount of money printing that Trump can do, then okay, I'll take some chips off the table. So I don't have a price level in mind. It's more of a feeling of like, okay, well, is the expectation on the money printing too high or too low? I'm writing a piece right now about the collapse of the euro, predicated by a French default. And so I think there's some other things happening within the global markets that could continue to propel this notion of money printing. And at the background, I have to recognize that we are in the midst of a unipolar to multipolar change in world order. And change for politicians is bad because, what do they do when change happens? They print money to make sure people feel okay. And so if I overlay all these things together, I have a very bullish outlook for the amount of money that's going to be printed between now and the end of the decade. The question just becomes, what are the expectations within the crypto ecosystem about, or just a general macro ecosystem about what that is? I think that people are underpricing the upside in equities, in crypto, and everything. They don't realize how badly all these governments need to print money. Yes, it's going to end in absolute Armageddon at the end of the cycle, whenever that is. But I don't think we're there yet. Governments are only starting to get the mojo back about, I'm going to print money to buy defense goods, to hand out handouts to the population. China is, battling with its own sort of deflation and doing drips and drabs of stimulus. They'll come around to the party too, in some way, shape, or form. The Japanese have to do it. The Europeans have to do it. The Americans have to. Everyone has to do it at the same time. And we have this AI robotics deflationary effect, which could completely destroy the fractional reserve banking system if everyone doesn't have a job and now has to service all these debts. What do? Do we fully reserve the system and print money to make sure the banks are okay, or do you let everyone go bankrupt? I don't know, right? We have a lot of big societal choices, and usually when humans have big societal choices, the government chooses to print money first. So I think we're in this first inning of this massive change in how we organize this global society, and therefore I don't believe in the 4-year cycle. I believe that we can continue ripping through, $150,000, $175,000, $200,000 Bitcoin because of this massive macro overlay of what is happening right now between now and the end of the decade.
The market is currently at a turning point where long-term institutional accumulation and fear-driven selling collide. Due to significant ETF withdrawals, seasonal headwinds, and technical breakdowns, Bitcoin's short-term prognosis appears precarious. However, endowments, global funds, and sovereign wealth may be subtly preparing for the future, laying the groundwork for its next significant cycle. Institutional behavior shows that the long-term tale is far from finished. But Arthur Hayes' warning points to additional downside before the next leap higher. The speed at which attitude changes and the amount of capital that intervenes during the upheaval will determine whether this turns into a historic washout or a generational buying opportunity.